Hello, my name is Eric Wilkinson. This is Pro Trading Strategies Daily Market Commentary. Keep in mind this is an educational company, so anything that I talk about in these videos are not considered to be solicitation or recommendations for trades. I'm just kind of talking you through what I'm doing here today. This morning we had the unemployment jobs data, non-farm payrolls came out a little bit better than expected. That really caused the bonds to sell off. Actually, Fed Fund futures priced in a little bit better than a 50% chance of a rate hike in September. I don't really see that. I still don't see that. I talked about that yesterday, but it caused the bonds to really sell off. Yesterday I talked about them trading into the 152 handle. I really didn't think that the jobs data was going to be that good. I was wrong, but there was still a lot of opportunity there. When the bonds sold off to 149, I put on a knob trade, which is basically selling the notes, buying the bonds. Did it 1-to-1. I covered that probably a little bit earlier than I probably should have, but you know, hey, it was money in my pocket, so I took it. Anyway, so bonds have kind of given back about 1.5 to the upside from that low. The real key level is going to be this 152 handle right here. That's going to be where you're really going to start seeing some really strong resistance. So that's been our support resistance level for a long time. That's going to be the real support resistance level continuing. I don't see that changing. If we can get above into the 152 handle, you should see that in the next couple of weeks trade up towards the 155 handle, which would be the next resistance level on the upside for the bonds. But with this bond trade that really got JP Morgan to rally. I mean, they jumped out of bed. Contrarian play here for me is to sell a call spread in JP Morgan. And as you can see, we're kind of trading up in here, so it's selling a call spread in the 168 handle. And depending on your risk, where you would buy your defined risk area, maybe a 170 handle, the 70 strike. So sell the 68 strike, buy the 70 strike. You can create some defined risk there. Anytime something pops out into the highs like this off of just speculation, there's nothing new news out there for JP Morgan. That could be a nice little contrarian play. Sell into the rallies, and you know, you sell the puts into sell-offs. So that's where you can kind of make your money and watch that volatility really contract that we've talked about in some of my online tutorials, so, and in the classes. So that's what we're looking at there. The other thing is USO isn't really helping out a whole lot. It is coming off a little bit. Yesterday we had a nice sell-off. We're right there at support on the 19-ish area. If we can get through that, we should see it push a little bit lower. The OPEC came out and said that they were going to keep production as is, but that could change at any time, you know, with the prices here. So keep an eye on that. We are in a downtrend there. It is up against support, but if we can push a little bit further below that 19 area, we should see it off to the test of lows there. So I'm hoping for a little bit of sell-off in crude oil and in USO here. And what else do we have? This SPY. SPY is doing pretty good. I am looking to possibly sell a put spread in here. Sell like the 208 and buy like the 206 or something like that, because if it gets below this area, it could break a little bit lower. But again, it's trading right along that trend line that we talked about yesterday, and it's a little bit below that. If it settles below, or if it looks like it's going to settle below that, probably going to hold off on that put spread. But if I see it trading up into here about the 210 area, that's where I'm going to think about putting that put spread on. That's all I've got for you today. Have a great weekend, and if you can't take that, take it easy.